Okay, so let's talk about the examination report now. The examination report comes at the end of the audit after the IRS has made its decision. I'm talking about the auditor now issues the examination report. We often refer to the examination report as a 30-day letter because it gives you 30 days to sign the report, accept the terms, or else appeal it. And the or else means that you're going, you can take an appeal and challenge it. Remember, I said in the first session when we talked about audits generally, the very first thing that we talked about is the fact that the right to appeal is absolute. You always have the right to challenge an IRS decision. And this is one way that we do it is through a protest letter that challenges the examination report. Now, before we talk about the protest letter, I want to talk about two essential elements of the examination report that you need to understand as counsel. And the two critical elements are Form 4549, which is entitled Income Tax Examination Changes, and then Form 886, which is entitled Explanation of Items. The Form 4549 is a list of the items that the IRS disallowed on the tax return. The 4549 is the worksheet that shows how they came up with the additional taxable income and tax they say is due. On page 1 of the 4549, they're going to have a listing of all of the various items they disallowed. So we disallowed this expense, we disallowed that expense. It's going to give you the year and the amount and the item that was disallowed. And then it goes on to calculate the correct, quote unquote, correct taxable income, and then it goes on to page 2, and it tells you what the penalties and interest are that they've asserted. And with respect to penalties, it tells you specifically the code section and the description of the penalty and the amount. And then it gives you the bottom line tax liability of X dollars, and it's got that broken out by year. And then you go on to Form 886, and the Form 886A, there might be 1 page, or there might be 10 pages, or there might be 20 pages. Depends on what the IRS disallowed and how much explanation the IRS gives you of why they disallowed it. Sometimes the explanation is very cursory, sometimes it's very detailed. But what you got to do is use the Form 4549 to understand exactly what they disallowed, and then the Form 886A to understand why they disallowed it. And from there, we're going to file a protest letter. The protest letter is filed in response to the examination report. You got 30 days to file the protest letter, and Publication 5, IRS Publication 5, tells us what needs to be in that protest letter. And so let's just go down the checklist of items. Number 1, the name and the address and the taxpayer's identification number, obviously. A simple statement that that you wish to appeal this report. The date and symbols of the examination report. These are the initials that are on the bottom of the page. The type of tax and the years in question is laid out there. A list of the unagreed adjustments. These are the things that we don't agree with. Where are these coming from? They're coming from IRS Form 4549. All right, look at Form 4549, go through it in detail, and understand what you agree with and what you disagree with. In every single audit, friends, I shouldn't say every single audit, but in the vast majority of audits, there are multiple issues involved. 3 or 4 items that are disallowed, sometimes more than that, sometimes 6 or 8 or 10 items that are disallowed. And as you go through that report and you see what they disallowed, and you go through the 886 explanation of items and you understand why they disallowed them, you're going to find that some of the IRS's determinations are correct. If there's 6 issues at stake, they might be right about 2 or 3 of them, but they're going to be wrong about something every single time. And in fact, in the statistics that come out of the appeals office, which I talk about in How to Win Your Tax Audit, the IRS's the appeals office reports that examination results are wrong between 60 to 90% of the time, depending on the issue. So I'm telling you, there is always something wrong with these examination reports, and it's almost always worth appealing them, because you're almost always going to do better on appeals than you do with the tax auditors. And so I just wouldn't hesitate to appeal these things. And so you're going to express your disagreement with these issues based on the Form 4549 and the explanation of items. Now, if you're representing a non-filer, a person who has not filed a tax return, and the IRS has come out with their what they call substitute for return, the SFR, those calculations are presented in the wage and income transcripts. And so if the IRS says, the taxpayer's income was X and the wage and income transcripts show that it was Y, well, then right off the bat, we got the wrong income. And the other thing, of course, is that in SFR calculations, the IRS never, and I mean never, takes into account the deductions of the taxpayer. And remember, the burden of proof is on the taxpayer, so they don't have to take them into consideration unless you provide specific evidence of these various deductions: mortgage, interest, charitable contributions, whatever, business expenses, whatever it may be. So now, moving on, the next thing that we have in this examination report is a statement of facts to support your position. And you're going to have a separate brief statement of fact for every item with which you disagree. So align the fact statement with the adjustments that you disagree with. The statement should be sufficient to establish your basis for disagreement. For example, if the IRS disallowed all of your business expenses, you would say something very simple along the lines of, the taxpayer operated a business for the purposes of earning income, and these expenses were incurred in the ordinary course of business. And, so just a general statement like that to establish your fact basis for it. The next thing you need is a simple statement of law to support your position. And again, you're going to align this with the facts. So the law aligns with the facts align with the specific items that were adjusted or disallowed. And so now you don't have to have a legal brief here. All right, this does not have to be a very, very elaborate legal explanation with court cases and citations and all the rest of that stuff. All you need to do is point to a specific statute. For example, if we're talking about business expenses, travel expenses as an example, you would point to Code Section 162 that allows a deduction for expenses incurred in connection with earning income. And then you would point to Code Section 274, which establishes what the burden of proof is. And you would make a statement very simply to the effect of, in accordance with Code Section 162 and 274, that you have established that you're entitled to these expenses, and the IRS arbitrarily disallowed them. So it's a simple process. Now, all right. So now you're going to have a perjury clause. All right. The perjury clause is very simple. Just states that that under penalty of perjury, as counsel, you've done an investigation to determine that there's, that the facts presented are true and correct. The perjury clause is with respect to the facts of the case, and you can see a sample perjury clause is included in IRS Publication 5, which I talked about a minute ago, and is also included in my book, How to Win Your Tax Audit. So now, let's go on and talk about some documentation. Documentation, evidence, and so forth to support your position is not required to be submitted with the protest letter. All right, the protest letter is basically a bare bones letter. So, depending on how many issues are at stake, we're talking about maybe a 2 to 4 page letter. It's not lengthy. It's not elaborate. All it has to do is inform the IRS of what issues you disagree with and why, and a very simple legal statement of your legal position, or the law that supports your position. So you don't have to provide copies of the documents. When you have an appeals conference later on with an appeals officer, you'll have ample time to provide additional documentation if you need to. Now, you got to mail the protest letter to the person to contact. This is going to be the individual that's identified in the upper right-hand corner of the letter. And the name will be up there, and of course the address will be at the top of the letter. You need to use certified or registered mail. Actually, these days I use exclusively priority mail with tracking. It's a little bit more expensive than certified mail, but you don't have to pay for the return receipt, because when you get the tracking, the post office automatically tracks it, and you can just go onto their website, the post office's website, punch in your tracking number, and then you'll get proof of delivery. So you need to mail the protest timely. You've got 30 days from the date of the letter in which to mail your protest letter. And in accordance with Code Section 7502, the date of mailing is the date of filing. All right. So as long as you get it mailed by the 30th day, you're good. And as long as you use either priority or certified mail, you'll be fine as far as proving that. And if your deadline falls on a Saturday, Sunday, or legal holiday, then the due date is the next business day. So you keep that in mind as well. Now, I want to talk about a notice of deficiency here. The notice of deficiency, I mentioned in the part one when I was talking about the assessment statute of limitations and whether to waive it or not. The question of a notice of deficiency came up. There's a lot of misunderstanding about notices of deficiency, and I want to clear this up because it's very, very important for you as counsel to understand what this is. Before the IRS can assess a tax against an individual, an income tax, or certain other taxes that this rule doesn't apply to, but when we're talking about income taxes, this is an absolute hard and fast rule, no exceptions, invariable. Before the IRS can assess a tax, they have to mail a notice of deficiency. The notice of deficiency constitutes the final administrative determination by the IRS that the taxpayer owes money and how much money it's owed. All right, the notice of deficiency is the final administrative determination. So the 30-day letter that we just talked about is not a notice of deficiency. It's a 30-day letter that gives the taxpayer the right to appeal. Even if you don't respond to the 30-day letter, either on time or at all, the IRS cannot assess a tax based on a 30-day letter. They must mail the notice of deficiency. It's part of the deficiency procedures. All right, once the IRS makes its final administrative determination with the notice of deficiency, the citizen has the right to seek judicial review of that determination. And this is done in two ways. The first way could be a lawsuit in the United States District Court. But in order to get into the district court, the tax has to be paid in full, including all the penalties and interest. Then the citizen has to file a claim for refund with the IRS. And if the claim is denied, then he's got 2 years to file a suit for refund in the district court. Obviously, that's a more expensive route because it requires full payment of the tax. Even if you think you don't owe it, it's got to be paid in full. The next option is to file a petition for redetermination in the tax court. And this is a prepayment option. The tax does not have to be paid. The petition has to be filed with the court within 90 days of the date of mailing the notice of deficiency. The notice of deficiency's got a date in the upper right corner, and it's got also in the upper right corner an entry that says last day for filing petition. And it gives you that date 90 days out. And that is the day on which you have to file the petition for redetermination. All right, now, a timely tax court petition prevents an assessment. Under Section 6213, the IRS cannot touch a nickel's worth of your assets while the case is in court. All right, but you've got to file a timely petition. And here is the key. There is no extension of time that's available for filing this petition. I see happen all the time where a taxpayer gets a notice of deficiency and they'll call the IRS up on the phone. And I've even seen tax pros do this, make this mistake, where they'll call the IRS on the phone and they'll say, we got this petition, but we need, or this notice of deficiency, but we need more time. And the IRS person on the other end of the phone will gladly say, oh, we can give you more time. You've got 60 more days. Don't worry about it. We're not going to do a thing for 60 days. Well, friends, they say that all the time, but they don't have the legal authority to do it. This date for filing a petition is fixed by law. It's 90 days. The IRS can't extend it. You can't extend it. You have to get the petition filed within that time. And a timely petition is a prerequisite to tax court jurisdiction. So if you don't get it filed, you default. The IRS will assess the tax, and now they can collect it because you defaulted on the notice of deficiency. So you cannot allow these notices of deficiency to default. You have to understand that the petition has got to be filed. And once it's filed, then the case goes back to the appeals office where you're going to get full consideration. We talked about this in the prior session in part number 1. So do not misunderstand this notice of deficiency. It's critical that you know how this thing works. Once you file the petition, or as I said, failure to file that petition is going to lead to an assessment, and they'll collect the tax. Now, if you owe under $50,000, to the IRS, you can file what's called a small tax case. And the small tax case is the Judge Wapner version of the United States Tax Court. It's small claims court before the United States Tax Court. And so that is an option here that really simplifies things. I wrote a book called The Taxpayer's Defense Manual, which has an entire chapter on it in it that shows you how to deal with the United States Tax Court and how to deal with notices of deficiency to make sure that the client's rights are protected. That's the most important thing as counsel at the tail end of these things. If you've got a notice of deficiency, you have to take steps to make sure that the client's rights are protected. The other thing is this appeal goes to the tax court, not the Internal Revenue Service. I've seen tax professionals in the past file protest letters with the IRS in response to a notice of deficiency. That's the wrong answer. If you send a protest letter to the IRS in response to a notice of deficiency, it's going to go straight in the trash. They're not even going to mail it back to you. It's going to go right in the trash, and they're not going to bother to pick up the telephone and tell you that you mailed the protest letter to the wrong place. All right, the tax court petition has got to go to the United States Tax Court, not to the Internal Revenue Service. And the address of the tax court in this statement is right on the face of the notice of deficiency in the cover letter. So it's right there, plain as day. And so take care. Do not mess up these notices of deficiency and cost your client their right to challenge the underlying tax liability in the United States Tax Court.
Alrighty, and wrapping up, we want to thank you again for attending the session in both sessions, and Dan for being here. Great knowledge as always. Check out his other courses that we have on the platform. We've got a lot of information. Also, as you can see on the screen, we've got ways to get a hold of him, some of his resources, books that he's mentioned, etc., as well as resources with the Canopy community, other places that you can take free courses. And we hope to see you on future free courses. I want to thank you again for attending today.